How's it guys? Welcome back to FX Rhapsody. I'm just going to make a quick little video. Nice little entries, two entries, buy and sell on the British pound, Japanese yen that I just wanted to share with you. Before we hit the charts, just go visit my website. It's on the bottom left corner over here. Link is in the description. We will find some very nice trading material, reading material, some categories for those of you that's getting started in trading. For those of you that's a little bit more advanced, there's some nice strategies to go and have a look at. And then also preferred brokers. These guys are absolutely brilliant. You always need a reliable broker on your side, so go check them out. And then obviously the COT reports. I'm not going to do analysis now today on the on this currency pair, so we're not going to be using the COT reports, but the COT reports is there for you to download for free under the resource tab. So let us hit the chart. So like I said, it's just going to be a quick little video. We're just looking at the British pound, Japanese yen. I just wanted to show you how you react, or how you can react to what the market gives you. It's not always necessary to predict it, but again, depending on your trading style, but I prefer to rather react to what price gives us. Okay, so we did our analysis this weekend on the British pound, Japanese yen, and I still, like I've done with like I do with all my analysis, I draw my two little lines, and then whenever there's a break of these lines, the structure basically, I will just react and see what the market gives us, and then trade accordingly. So we're going to be looking at the 1 hour time frame first, and then we're just going to drill down to the 15 minutes so that I will show you a nice little setup. Again, we're going to be talking about, like I said to you, I'm going to show you a buy opportunity and a sell opportunity. So it's not necessarily that you will just buy in an upwards market or sell in a downwards market. You can do both and still catch your pips, also depending on the type of trader you are. Okay, so on a 1 hour time frame, like we see, what happened this week is price just made a huge bullish candle. Price broke the structure, and like I've said before, we always look for these areas in the market, and as you can see, a very nice fair value gap that was formed in the market. And then also, for those of you that's watched my fair value gap videos on how to trade it, you have this gap that is formed, and then what I do is I just pull my Fibonacci for this gap, because now this is now formed, and now you're waiting for price to retrace. And what's the best area, or where's the best area that you want price to retrace to? It is halfway, in that fair value gap. So it's the 50% mark on your Fibonacci. And then you just wait until price gets to that line, and once it gets to that line, that is where you will place your buy order right there. Your risk is going to be very minimal, depending on your own risk, or depending on the risk you want to place. A lot of times, just keep it as tight as possible. There is moments that price will just reach beyond this, or just go through this fair value gap. So a lot of times I tell traders, just rather have your risk just below this candle. But if it's a huge candle like this, your risk is a little bit big. So, normally just have it just below that fair value gap, so that, that you're safe. And usually when price just goes below this, the fair value gap is not active basically, or it's hunting a fair value gap at the bottom. But in any case, so nice little risk area, and then you take, your profit, or your target will be up above. In this instance, target, if you go to the left hand side of the chart, so you will see that, I'm just going to zoom out a little bit so we can see clearly. As you can see over here, all the highs have been taken out, by the British pound. So all the highs have been taken out. So you will have areas, I'm just going to take this out, this is from previous analysis. So your areas is going to be this target first. All the highs, you just mark out all these highs that's still active, because price action hunts all these high areas in the market. And if you scroll back, so now the first one was taken out by this movement upwards, and then a retracement, and then your next target will be more or less up here. Okay, it's not always that your target will be reached, or always that the highs will be taken out, but I mean, if it gets very close, and as we can see in this instance, price came very close to that high. Okay, so that is going to be when price gets close to that area and you are happy with your profits that you have in your trade, then you start taking your profits. You can scale down on your trades by taking partial profits, but I mean, it's all up to you guys. So if you had to take this trade upwards, it would have been at least 120, almost 120 pips profit that you would have taken. Okay, so now we have got a nice little buy setup, and then what happens normally when price reaches a high or takes a or goes to a high, it comes back to retrace. So now we can see price just slowing down with these candles, these hourly candles just getting shorter. A nice area there, then price started consolidating. So now what you do is you take out your Fibonacci, okay, from this swing low to that swing high. Okay, your swing low will be this one over here, that retracement on the fair value gap. The swing high will be your target that you took. So now we're looking at another buy setup, because we know that price is hunting that liquidity areas that I've just highlighted before. So we know price is coming back to hunt those areas. But before it comes back, it needs to come and retrace and to at least a 62% or 79% area. So now price is above up here. So now we're waiting for price to come back to the 62 before we take another buy setup. But you can also sell your trades down to this area. And I have told or I have spoken about this before. So what you do is you highlight that area in the market. You don't have to leave your Fibonacci. You can leave your Fibonacci in there. But for me, I'm highlighting that area. Okay. Then what you do is you drill down to your lower time frames. Now you can, obviously, your entries will also be on your lower time frames depending on your trading style. But now what we have is price. You had your target up here. So that was your target area that you took took profits. We have got an area at the market down here that we're waiting for another buy setup. Okay, that is your retracement to the Fibonacci. From here on, we want to buy again, because if it hits that 62% area. But you can sell down, right? So how do you sell down? You can see that price is consolidating up here. Now it's making movements. Now it's making a low and a swing high. And then it comes lower again, right? So that's making a lower high, lower low, lower high. So this is now time to take your Fibonacci out. So you take a swing high and a swing low over here. Okay, swing high, swing low, retracement to the 62%. That area. Okay, that's the area that you're targeting. Just going to draw it a bit to the side. You can see that area has been touched multiple times. And then this is that time that you sell down. Okay, you take your, where's my sell tool? That's your area that you sell. Okay, you have a small little risk in place, a tight little risk area, and then you can sell down for at least another 60 odd pips. Okay, and that is what happens, because once you sell in this area, where's your target going to be? Your obvious target is going to be this area of the retracement on the 62% on the higher time frame. And once it gets there again, then you buy. So this is what I always say to people, also say to traders. Don't just get stuck into a bias of I'm just going to buy the whole time. If you look in your charts and you look back in your charts, this is what happens. A lot of traders get stuck on one direction, just selling in a downtrend or just buying in an uptrend. But with this instance, as we can see, yes, we are buying in the British pound, Japanese yen, but also you sell down to the area and then you buy up again. So you buy up, you sell down, and you buy up. And these are the areas. I'm not saying just go and gamble on your sells and on your buys. Just go enter where you can. I'm showing you where the entries are. It's exactly what you're doing with the buy setups, you do with the sell setups. You just reverse your entries. I mean, using your Fibonacci or your fair value gaps. So again, you had a what was 120 pips up, then you had another, let's call it 60 pips down, and then another, because you're buying up again, then it's another 60 odd pips. So those are the amount of pips that you can catch in, what is that, 2 days. just on one currency pair. It's just by analyzing the market, looking at it. Don't just get stuck on one time frame. Look at all the other time frames, and you can see all these setups happening. Okay, so that is all from my side. I hope you enjoyed this little demonstration and on how you can catch a couple of entries. And you know, if you did, just don't forget to hit that like button, hit the subscribe button, hit the notification bell, guys. There's definitely more videos coming your way this week. So I hope you've been having a wonderful week. Stay safe and happy trading, guys.